Hello, and welcome to the special presentation for the week of November 1st, 2019, entitled A Powerful Way to Find Hot Stocks. My name is Glenn Tompkins, Senior Instructor here at VectorVest, and it's my pleasure to give you a presentation this evening. Now, hot stocks are something that are a great way to make money in the market. These are stocks that are moving up. They have a lot of different characteristics, but it's a great way to jump on board on a short-term trade to be able to make money a little faster. But you have to know how to manage them as well. But the overall idea is that it is a shorter-term trade, and you're going to be able to cherry-pick these stocks to make sure that they're doing the things that you want them to do before you buy them. So with that in mind, let's talk about what a hot stock is. A hot stock is a stock that's moving up in price. Well, that makes sense, right? The next thing is you're looking for a consistent movement. Stocks that have been doing this for more than just a day or so, all right? And the next thing you want is high probability of continuation. So keeping all of that in mind, we offer you hot stocks every day in the Daily Color Guard Report. The education department comes together every night to present you with some hot stocks to take advantage of. But tonight, we're going to talk about showing you your own way to find your hot stocks at any time, any day. So let's get into the software. We're going to move from the home page, and guess what? We're going to go to the Unisearch tool. We've now got a new search specifically for finding hot stocks. If we go down to, and you're going to have this in your software, if you go down to the cherry picking folder, you're going to notice a new search in here called hot stocks. Now, as I open it up, let's talk about what this search is looking for. Remember, we're looking for three things to find hot stocks: stocks price moving up, consistent movement, and high probability of continuation. So we start off with stock price less than $100. Now, many of you say, man, that's a lot of money. Well, there's a reason why. Let's go to average volume greater than or equal to 250,000 shares. We're definitely looking for liquidity on these stocks to possibly get into. Recommendation has to be equal to a buy. So not only are these stocks moving up, they have buy recommendations. It takes a lot of work for a stock to get a buy recommendation. Folks, never sleep on a buy recommendation. Now, this is key stuff here. Percentage price change greater than or equal to 1%. So we're looking for stocks that are moving up in the positive. So they are less than $100, good liquidity, that are a buy. But when you run the search, these stocks have to go up at least 1%. You're now looking at buying into a stock that's already rising. Now, we did other things. We did price split adjusted. We wanted a trend on price. Remember, consistent movement. So we did a weekly trend. And if I look at the custom, the weekly trend says that over week 1 and week 2 with a plus in it, the price is moving higher. That brings in that consistency of movement of price. So we're using a trend indicator. Next, we're going to use another indicator only found in VectorVest called the CI or Comfort Index. Comfort Index is one of our proprietary indicators, which is cast on a scale between 0 and 2. Above 1 is favorable, below 1 is unfavorable. Comfort Index looks at a stock's ability to withstand long or lengthy price declines. In layman's terms, these are resilient stocks. Every stock is subject to a pullback or a downtrend. High CI stocks have the ability to withstand those downtrends and are having the ability or resiliency to rebound a lot faster than other stocks. So we're looking at the Comfort Index to be above 1, which is favorable. But we took it a step further. We want the Comfort Index to be greater than it was 4 weeks ago. We're still building in the consistent movement. So it's all being built into the search. Next, we're looking for the price split adjusted to be hitting a new high over the last 5 weeks. So consistency with the Comfort Index, consistency with the price, and now we want it to be hitting a new high over the last 5 weeks. Price actual greater than $1. So we are in between $1 and $100. And the other things that make the stock or the search Derby ready. We take out the indexes like the bulletin board, the indexes, the optionable bulletin boards, the optionable indexes, and other optionable NASDAQ components as well. And we don't want to find ETF shorts. So in all, this is the criteria needed to put into your hand to go through over 8,000 stocks to find the hot stocks. But wait, there's one more thing. The sort is what makes the search. So we are looking at the stocks to be sorted by RT times CI. Stocks that are in an uptrend and have good comfort index. Put those two together, you get a powerful sort, especially from the aspect of hot stocks. So again, a new search, hopefully walking through the characteristics of what the search is all about, brings to light why this search is going to be such a good part of trying to help you to find hot stocks. So let's do this. Let's take a look at what it brings up. Let's go over the last month. We're going to use my date bar. We're going to go back to the beginning of October 1st. Now, keep in mind, remember, hot stocks for short term. Now, let me define short term, a couple of days to a couple of weeks. That's about short term. So these are stocks that are going to go up nicely. These are not stocks that you put into your retirement portfolio. These are stocks that are explosive that you can take advantage of. And I'm going to show you how to manage the trades as well. So let's go up to October 1st. All right, October 1st, let's see if all of these characteristics can find a stock. We'll click on Run the Search. So this search is very picky in what it's looking for. And notice that on 10/1, it didn't find any stocks. That's okay. Remember, out of all of the stocks that we're tracking, we're honing in on just the hot stocks. All right, let's go up one more day. Let's go from 10/1 to 10/2. Let's go see what happens there. Run the search. We find one stock. Notice where it is. It's Lennar. What is it in? The home builders. What's one of the hottest industries we had over the month of October? Home builders. It does make sense that this stock was found. Well, let's go take a look at the graph of the stock. We're going to open it up. We found this on 10/1. First off, look at the equity curve of the graph over the last year. This is no doubt why it is a hot stock. Let's go to 1 month. Let's go find 10/1. Now, this is what you look for. Keep in mind, we're helping you to become an informed trader. Well, we're getting the great information from the search, but you now also need to be a smart trader. What do I mean by that? So the search on 10/1, or actually on 10/2, found one stock. What are you looking for the next day? Follow through. If you're in a stock that's over $20, you want to think about putting in a buy stop order 12 cents higher than the close of the stock on the day that you're looking at. So on 10/2, we would have been looking at Lennar. The close price was $57.82. If you're looking at this from an end of day basis, you'd say, all right, this is a hot stock. Let me put in my order 12 cents higher than the high. If it hits, great, I'm in the stock. If it doesn't, and the stock is going down, it doesn't hit, you're fine. So going into 10/3, did the stock meet the criteria? Yes, it did. It went more than 12 cents higher than the high or the 12 cents higher than the close. You're in the stock. Guess what? Day one, you made money. Well, you say to yourself, well, do I keep on holding it? Day two, you made money. Notice that I have on the graph a 10-day moving average. Notice that as the stock pulled back, the 10-day moving average wasn't hit. And look at that. We went up, we went up, went up, went up. And when did we get out? When the stock's price hit the 10-day moving average and went below. Was that a good opportunity to hold on to that stock and make money as a hot stock? The answer to your question is yes, it is. So now, let's talk about some ways to get out of the stock. I am looking at a 10-day moving average. Let's get back to the slides real quick. Now, in managing these hot stocks, some things to consider. One of the things, let the software do the work for you. Why not use the Profit Locker or the Profit Locker Pro? It's doing the work in the background and it will send you an alert on when to automatically get out of the stock. Use a moving average of your choice. In this case, I'm using a 10-day simple moving average. Consider using a trailing stop. So if the stock trails X amount of percent from the highest point that the stock is hit, it will trigger you to get out. Look at support and resistance. If you're buying into a stock, the stock breaks through resistance, you can look at the stock breaking through support as a way to get out of the stock. So several different ways to manage a hot stock. In this case, on these graphs, I am using a moving average as a visual representation to determine when to get out of the stock. But if you want a more automated way to go do it, use the Profit Locker or the Profit Locker Pro to help you out. Let's get back into the software. So let's go. Well, only one stock was found that day. Look at the RT. The RT was a little erratic. Well, because it's a more volatile stock and as a hot stock. But guess what? Did you make money? The answer to that is yes, you did. All right, let's close out of that graph. Let's get back into the software. Let's go run it another day. So on 10-2, we found one stock. Let's go to 10-3. Bring this over. On 10-3, we'll run it. Hey, we found another stock besides Lennar. Notice that Lennar popped up now for 2 days. How comfortable would you be taking that stock as a hot stock now showing up as 2 days? Again, the search is doing the work, bringing to the forefront the hot stocks. Let's graph these two. This was found on what day? This was found on 10-3. All right, so let's maximize this. Let's go put this, look at that again. Another stock, 1 year graph, beautiful equity curve. Put this on a 1 month graph. Let's go find 10-3. Put on the date line, 10-3. Did you move higher than the prior day's close? Answer to that is yes, you did. So now, guess what? Day one, you made money. What did the stock's price do? Well, it trudged up a little bit. And notice that the stock's price never fell below the 10. Look at that. This is on end of day basis. Never fell below the 10. Wow. Look at that. Even all the way up until now, the stock never fell below the 10. Would you have been happy? And boy, oh boy, is that a hot stock. Let's go back to Lennar on 10-3. You would have gotten in the next day. It did go higher than the close. Look at the pullback. Remember, these are stocks that have resiliency to big pull downs. So even though the stock's price pulled down, we have built in the stock's resiliency by way of CI. Look at the stock's price staying above, boom, it hit, you got out. Remember though, you can add in support and resistance. You can add in a trailing stop. And I like the automation by being able to use Profit Locker or Profit Locker Pro to do all of the work in the background for you, but visually, looking at a simple moving average like a 10-day to get you out is not a bad way to go. All right, let's close out of this. Let's go up one more day. 10-4, which would have been Friday. Click on it, run it. Even as picky as this search is, now more stocks are being found. Keep in mind, on the day that you run the search, all of the stocks are up. Why? Because the search is looking for the stock's percent price change to be greater than or equal to 1%. You're already looking at stocks that are on the move, but you're using the graphs to make sure that you're buying in at the right time. Let's graph the top 10. Let's go look at the equity curve. Look at that over the last year. Beautiful equity curve. Let's put it on the last month. Let's go find 10-4. All right, let's go put on the date line. There's 10-4. Now, even though the stock's price went up, did it go up enough to bypass the prior day's close? Probably not enough. So guess what? We would have missed out on this, but we're using rules to make sure that you're a smart trader. How do you know that it was supposed to go up like this? You don't know that. Use the graphs to help you determine if it's okay to go in the next day. Let's go to the next stock. Whoa! Frontline shippers. They were hot and heavy in October. Nice gap up the next day. Went up, pulled back down. End of day, closed below that 10-day moving average. Would that have been a good day to get out? Sure it would have. Where you had to have the opportunity to make money, you probably would have been just about even on that trade. All right, let's go to the next stock. Next stock, Sting. Did it go higher than the previous day's close? Yes, it did. Look at that run up. 1, 2, 3, 4, 5, 6 days you're in the trade, right? You're like saying, whoo, this is great. I'm going to give you another way to consider getting out of a stock. We're going to use candlestick patterns. What is this candlestick pattern that is formed right here? This is known as a bearish harami. How do you know if it's a confirmed bearish harami? If you have a down day the next day. Would that have been a good opportunity to get out by way of candlesticks? Yes. Would you have made money on the trade? Yes. Let's say you don't know how to read candlesticks yet. Well, let's stick with the 10-day moving average. When did it cross? Here. So learning how to read candlesticks could have gotten you out a little earlier. How do you learn how to read candlesticks with VectorVest? Well, I'm glad you asked. We have a course called Trade Like the Pros. We do get into a lot of different candlestick formations, and utilizing that information can greatly get you out or mitigate losses a little quicker. Something to consider. All right, let's go to the next stock. In PHM, that stock did not move up the next day higher than the close. And guess what? The stock's price went up. That's all right. You don't want to cry over spilt milk. This is a good way. Remember, one of the things that we're looking for is the high probability of continuation. That's why you want to make sure the next day that you are moving higher than the previous day's close. That didn't happen. That's all right. Let's move to the next stock. The same thing didn't happen here. We didn't go higher than the previous day's close, which is on the 4th, going into the next day. We didn't go higher than the previous day's close. That order would not have hit. Next one, that one would have hit. So 10-4, we would have found the stock. Next day, we gapped up, did close higher than the previous day's close. I like that. Now, candlestick patterns here. Not much that we could have used. And when did it close out? When the stock's price went below the 10, that would have been a great opportunity to get out of the stock and capture a profit. Next stock, ES. The stock's price probably did not move up enough. This is an $82 stock. I would think about putting in my buy stop order for the next day about 12 cents higher than the high, which is about 1/8 of a point. That helps us to make sure we're buying into a rising stock. That trade would not have triggered. Look at the pullback. Let's go to the next one. This is Southern Company. The stock's price did not get to go higher than the prior day's close by about 12 cents. Guess what? That would have panned out. We wouldn't have gotten in. The stock's price did go up higher though. But remember, I'm looking for a high probability of continuation. That's why we're looking to see if the stock's price goes up higher the next day. This one did. AQN. Price went higher. What's that candlestick pattern right there? That is known as a shooting star. It is also a possible reversal. What do you need for confirmation? For the stock's price to go down the next day. Guess what? It did. That would have been a good opportunity to get out of the stock. Or again, if you don't know how to read the candlestick patterns, it fell below the 10-day moving average here. I want to talk to you about taking the loss on the trade. We would have gotten in some part of this day. Closing price, let's use the worst case scenario. Closing price, $14.06. The closing price on the day where it went below, $13.63. Guess what, folks? That's less than $1 move. Would you have been happy mitigating your losses that quickly? The answer to the question should be yes, I would have been. All right, let's go back to, what's the date that we're looking at? I forgot already. 10-4. Let's go back to 10-4. Let's go to the next stock. Next stock, we would not have cleared. The buy stop order would not have hit, even though the stock's price went up. That's all right. Use the rules. Become a smarter investor. Make sure you have a high probability of continuation before pulling the trigger. All right, now that we've looked at 1 week, let's go look at on a week-over-week basis. Let's go to the next Friday, 10-11. All right, let's run the search. Stocks are being found. That's a beautiful thing. Let's do a graph of the top 10. Let's go see what's going on. Put this on. Look at the equity curve. A little bit more choppy than some of the other stocks, but overall over the last year, moving higher. Let's put this on a 1-month graph. Let's go find the date of 10-11. Okay, let's go put on the date line. Where's 10-11, 10-9, 10-10, 10-11. That would, actually, that would have hit. Why? This is a closed green candle. The price finished at the bottom of the candle. So the price the next day did go higher than the close, definitely by more than 12 cents. You would have hit. Now, what happened? So on day 1, did you make money? Yes, you did. Day 2, the stock's price gapped down. Where did the price close? On the closing basis, it closed below that 10-day moving average. Would that have been a good time to get out? Yes, it would have. Let's take a look at the price. The price on the day that you would have, that's the closing price. Let's go up to the day that you would have gotten in. The closing price was $11.71. Let's go look at the price where you would have gotten out. You're at $10.76. That's about $1 move. That's about a 10% move on that stock. Guess what? Remember I talked about using a trailing stop? You would have gotten out intraday a little quicker if you used possibly a trailing 5 or trailing 7 stop. How about thinking about that? All right. So let's go back and find 1011. Let's go to the next stock. This stock would not have, actually it would have cleared. It started up here. Where's the price? $4.79. What was the high price here? It may or may not have hit. But nonetheless, if it did not hit, I don't think you would have, it moved up enough to hit. So because it did not hit, what happened? Stock's price pulled down, got below the 10-day moving average and fell. This is part of being a smart investor. Let's go back to, oops, we're on 1014. Make sure. Yep, we're on 1011. Sorry, just want to make sure. 1011. Let's go to the next stock. We're going to do this kind of quickly now. That would have hit. Boom. What is that? Bearish Harami. Follow through. Good time to get out. I probably would have taken a small gain. If not, 10-day moving average breaking across down below. That's your opportunity to get out. Next stock. That would not have hit. The price did not move higher enough above the close. Actually, the closing price was 61.18. The high here was 60. Yeah, you probably would have hit. All right, you would have hit with the buy stop limit. Stock's price move, no confirmation, big drop below the 10-day. Again, mitigating the losses, not letting any of your losers run away. Next stock, 1014. That would not have hit. Stock's price evidently meant pretty much just moved sideways. That would not have hit by way of your buy stop order. This probably would have hit. The stock's price high was higher than the prior day's close. Look at that move up, close below. You probably would have been dead even on that. Notice how quickly some of these trades turn around. Now, LPG, this stock did go higher than the previous day's close. A little bit of a doji here, but look at this. Price never fell below the 10-day on an end-of-day basis. And look at that. Even going into right now, you're still doing fine. Let's do this really quick. 1014, that would not have hit. It did not go high. Actually, let me back up. The close was down here. The stock's price did hit. All right, day one, you would have made money. It did close higher than the previous day's close. How about here? Would you have gotten out? Yes, by way of the rules, the price did close below the 10-day, gotten out. I know the price of the stock went up, but guess what? Even on a loss, we mitigated our loss. We took a small loss. This one, we did hit. We did run up. The 10-day, we did cross below the 10, but how about this? Not a real candlestick pattern here, just 2 bearish days. Look at the tip of the wick on that stock. Stopped right at that 10-day moving average, but that was a good opportunity to close out. You probably would have been dead even. Let's take a look at one more stock. That would have hit 2 bearish days in a row, followed by a third. That could have been a good way to get out, or wait for the stock's price to go below the 10-day. So we can continue to go on day after day or week after week. Just run it again, 1018. I'm not going to go through all of these, but run this. Here's the stocks. Keep in mind, all of these stocks, and a lot of these stocks you know about. A lot of these stocks you do know about, and they are rocking and rolling as hot stocks. So that was just looking back in the past. All right, I'm going to give you a real live story of something that happened today. All right, I'm going to take this all the way up into current, which is today. All right, and we set this search up to go into your software by Monday, but we found out that it actually went into the software today. Someone in our jockey club, which is our trading room, by way of looking at the VectorVest Derby tool, saw it, found it. I'm going to set this up as of not the close of today, but I'm going to go to about a half an hour after the market opened. I'm going to go to the 10 o'clock hour. Now, what caught my attention is that they typed in the room that they found a search called hot stocks, and they invested in the top stock round about the 10 o'clock hour. I'm going to run the search. There about that time, there's the stock, UCTT. All right. At the time, it was up 1.57%. The customer in the room said, hey, I found a search in there. It says hot stocks. I ran it. I took advantage of the top stock. Now, I want to show you something. At that time, at 10 o'clock, it was 1.57%. I'm going to take it now to the end of the day. I want to show you what that stock did by the end of the day. So 1.57 at 10 o'clock, the stock finished up 3.56%. How cool is that? So think about it. I'm going back in time to show you how to use it on an end of day basis. But if you are a subscriber that has intraday or that has real time, you can use this throughout the day. How cool is that? And that is a real live story from someone in our trading room with the VectorVest Derby in the Jockey Club who found the search accidentally, ran it, found the stock, and made money on the trade. So whether you're end of day, whether you are intraday, or whether you are real time, if you want to find the hot stocks in the database of over 8,000 stocks, let the database do the work. This search is a powerful way to find your hot stock. So with that being said, I want to say thank you for joining me for this week's presentation. If you have any questions, by all means, please give our product support staff a call. If you are new to the software, this may be a great way for you to make some short-term gains. Notice some of those stocks on that 10-day moving average kept you in those stocks without having to panic or feel, what do I do? What do I do? You have a plan. You are now an informed investor or trader with the advent of that search that we created. But now understanding the rules behind ensuring a high probability of continuation, learning to put in a buy stop order higher than the previous day's close helps you to make sure that you're still buying into a rising stock. So be an informed trader, but also be a smart trader. Folks, it's been my pleasure. Have a wonderful weekend. Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.